Ever wonder how legendary investors seem to pull off these incredible wins? The so-called 10-baggers in parts of the market that everyone else is running away from? Well, today, we're going to crack open the playbook of a true resource icon, Rick Rule. We're going to deconstruct his entire method into a simple, step-by-step guide you can actually use.
This quote right here, this is basically the secret sauce. The entire philosophy is built on this one idea. It's not just about buying low. It's about having the guts and, more importantly, the framework to buy what the market actively hates. Because that, according to Rule, is where the life-changing money is just sitting there, waiting.
So here's our game plan for today. First, we'll get into the right mindset. Then, we'll figure out how to spot those hated sectors. After that, we'll break down the two different types of companies you'll find, learn how to actually run the numbers on them, apply a final quality check, and then we get to the master key that ties it all together, the free option.
Okay, so what is the big idea here? It's actually incredibly simple. The best opportunities aren't in the hot, popular stuff. No, they're in the things that are forgotten, beaten down, and just completely undervalued. You go against the crowd, not to be a rebel, but because the crowd is almost always wrong at the emotional extremes. Now, this is maybe the most important rule in the whole playbook. Before you even think about picking a specific stock, you have to pick the right industry. And for Rick Rule, the right industry is one that everyone else despises, one that's unprofitable and, frankly, bleeding money.
The logic here is it's brutal and it's simple. Look, if the price you can sell something for is less than what it costs you to make it, something has to give, right? Either the price goes up or that industry literally goes extinct. There is no third option. This is the bedrock of the whole idea.
And that word is so important. This isn't a guess. It's not a hope. For Rule, when an entire industry is losing money on every single thing it produces, a price increase isn't just likely, it's a mathematical certainty. You're not speculating. You're investing on the side of inevitability.
So that brings us to the next clue for finding that hated sector. It's not just about the price today, it's about what the supply is going to look like tomorrow. And the best way to figure that out is to ask this one simple question.
He calls this the capital destruction matrix. It's a fancy name for a simple idea. When an industry is hated, the money dries up. No one wants to invest in building new mines or drilling new wells. So after 5, 6, 7 years of neglect, the existing supply just naturally starts to run out. A future supply shortage isn't a possibility anymore. It's already baked into the cake. It's guaranteed.
Okay, so you've found a hated sector. Great! Now it's time to pick a company. But listen up, because this is a critical fork in the road. There are two completely different kinds of companies out there, and if you try to value them the same way, you're going to get burned. Badly.
Just think of it like this. Producers are basically factories. They're already digging stuff up, selling it, and making money. You can value them with normal business metrics. But explorers? They are pure lottery tickets. They have zero revenue. All they have is a piece of land and a dream of finding something. You need a totally different toolkit to figure out what they're worth.
And this is where the rubber meets the road. We're going to get practical. Let's open up that toolkit and look at the exact formulas Rick Rule uses to figure this stuff out. And we'll start with those factories, the producers.
For producers, the key is discipline. Rule number 1, you only use today's commodity price. No daydreaming about what prices might do in the future. None of that. Rule number 2, you demand a high return, like 10% or more, to pay you for all the things that can and will go wrong. And rule number 3, the project has to be so good that it pays for itself in 3 years or less. It's an incredibly tough, conservative screen.
Okay, now for the lottery tickets. How on earth do you value a dream? Well, it's just a simple bit of subtraction. First, find the company's total market value. Second, subtract all the cash they have in the bank. And whatever is left over, that's what Rule calls the story value. It's the price the market is charging you for the what if. So here's the real trick. Your whole goal is to find a situation where a company might have spent, say, $50 million over the last 20 years collecting all this geological data, but today its story value is only $5 million. What you're doing is buying decades of expensive scientific work for 10 cents on the dollar.
But even if you do all that, you have to be realistic. The odds here are just staggering. This number is legendary in the mining business for a reason. Rule says it all the time. Only 1 out of every 3,000 promising geological spots will ever become a profitable mine. The risk of total failure is enormous.
So, how do you play a game where you have a 99.9% chance of losing? You play it smarter.
Rule's favorite model is called a prospect generator. It's genius. A small company does the initial legwork, but then they bring in a huge mining company to pay for the super expensive drilling. The small company gets to keep a piece of the upside, but they pass the multi-million-dollar risk onto someone else's balance sheet.
So, you've found your hated sector, you've run the numbers, you've found a cheap company, but you're not done yet. There is one last crucial filter. This is where you put the spreadsheet away and you start looking at the quality of the people and the project itself.
And this final checklist comes down to some really simple questions. Has the management team actually done this before and made money for people? Do they own a ton of stock themselves so they win or lose right alongside you? Is the potential prize actually big enough to be worth all this risk? Is the concentration of the metal high? And finally, is it in a stable country where you can actually keep what you find? A no to any of these is a major, major red flag.
Okay, now we're going to tie all of this together. The big macro picture, the 2 different ways to value a company, the quality checklist, it all leads to this one beautiful, powerful concept that is the absolute heart of the entire playbook.
This right here, this is the holy grail, the free option. It's that magic moment when you find a company that is trading on the stock market for less than the cash it has in the bank. You are literally buying its cash for, say, 80 cents on the dollar. And that means you get the entire exploration project, that lottery ticket with massive upside, for absolutely free.
So really, it all boils down to this one question. This is your ultimate safety net. If you could buy the whole company, sell off everything it owns, and get all your money back, or maybe even more, then you essentially have no downside risk. The potential for a massive discovery is all pure free upside.
And so we're going to end by turning this playbook over to you. We've gone through the mindset, the math, and the final checks. Now the real work starts. Take a look around at the markets and just ask yourself this one simple question. The answer could be your next big idea.